Moving onward to our next session, that is panel discussion, Navigating Financial Transformation in an Uncertain World, CFO Insights and Strategies for Success. Introducing our moderator, Mr. Jogendra Singh, President of Finance at Hero Corporate Services Private Limited. Mr. Singh is a seasoned finance leader with expertise in greenfield projects, manufacturing, and process improvement for transparency in business activities, seeking senior financial roles in reputable organizations. I also invite our fellow panelists, Mr. Hemant Kumar Ruia, CFO at DP World, Mr. Jaspreet Singh Arora, CFO at Cogent E-Services, Mr. Vikas Arora, EVP and Business Head of Supply Chain Finance at Shriram Finance Limited, Mr. Aayush Saraswat, Financial Controller at ABP Networks, and Ms. Rakhi Aswal, CFO of India at Saxo Group India. Can we have a huge round of applause to all the panel members?
Thank you very much. Thanks for this opportunity. And thanks to my co-panelist. We have a very interesting topic, on which we are exchanging our views today, and that is navigating financial transformation in an uncertain world. We talk about, the VUCA world, Bani world, and all that kind of a thing. But how do we navigate from all of this uncertain world that we are dealing with? So our journey begins. It's a voyage, that you have to navigate. And we navigate, all of you as CFOs navigate that voyage day in and day out. And this is a voyage where the tides of change converge with the transformation journey. When I look at CFOs, and I do, deal with a lot of CFOs around, not only in our, in our interactions like this, but also within our own companies as well. And I really look at them, and I remember some kind of philharmonic orchestra, right? And I see CFOs as the conductors of that symphony. What kind of symphony? What is a symphony? You have multiple factors, multiple areas, they all working together, and they can either create music or they can create chaos if they are not in harmony, right? And this is exactly what CFOs are doing today. They are creating music for the business. They're creating music for value. That's why we call them chief value officers also sometimes. So, and these are very interesting times when at one end we have tradition, and on the other hand, we have innovation. We talk about disruption as usual. Within that kind of scenario, how do you navigate your ship? I think that is very important. Now, what do I expect to see in this voyage, that we are starting on? One is the digital. We talk about, we have been talking about the digitalization, digital world. I think it started many years ago, probably, I remember the first book I really can relate to that was called Reengineering. This was a book by Hammer and Champy in 90s, which came, where we started talking about re-engineering the processes in a company and simplifying them, taking layers out of them, and automating them. I think the journey started from there, which I remember. And good thing is, maybe few of us have seen that, journey. Starting from a simple automation, start with Excel macros automation, and then went on, in other parts of the automation journey. And from that automation, we came to hyper automation. We then went to even, then there was an era of digitalization, RPAs, and today we are even talking about, then we started AI, and today we are talking about Gen AI. And I don't know what will come next, the hyper Gen AI or, hyper personalization. I don't know what is going to happen. The question is that this is an ever-changing world. This is an ever-flowing sea, and within that ever-flowing sea, how do we CFOs navigate our ships? So, a couple of things that I can, think of, which are the areas that we all will confront is, of course, digital, as we said. The other thing is risk. And then there is a very important thing, risk versus growth. And sometimes we say the biggest risk is not taking a risk, right? So there was a study by Bain which talked about, they had done some study on 3,500 odd companies. The companies which invested in turbulent times in 2008. So when there was a 2008 financial crisis, and the companies which invested in those times, they created, after 10 years, a hyper growth where CAGR was, something like 18%, versus the other ones, where CAGR was something like 5%. So if you take risk, take calculated risks, and that's what we all, looking at. So with the risk, also, comes the resilience. Next thing, which in my view is very important, is collaboration. It's not a solo journey. How do we create this collaboration model with all parts of business? You have the boards, you have the CEO, CFO, operations, all other operations kind of thing. How do you work together to really create this harmony, to really create this symphony? I think that is very important. And that balancing is extremely, extremely, important in my view. And then the most important part of this puzzle, if I may say, is people. Whenever there is any kind of a change that comes, whenever there is any kind of turbulence that comes, the most important, people. So whenever we say that, whenever you're looking at change, I said there are only 3 things that you have to do. I've said that many times, and the solutions are people, people, people. If you can handle your people well, if you can enable them, if you can empower them, probably that is the time, that is the way we can really, progress. So with this kind of background, the kind of turbulent times and the disruption time, the chat GPT times or Gen AI times and digital times and, all kinds of these ESG, is another, kid on the block. So all of this, how do we navigate? I have a very strong panel, and I'll start with Hemant. So how can CFOs collectively balance the pursuit of growth with risk management in today's volatile business environment?
Thank you, Jogendra ji. Risk, if we delve with it, I'll not go for growth. I'll deal with growth separately. Risk. I was coming here to this hotel for growth because I wanted to learn from all the people in this room, their views, Jogendra ji and this esteemed panel. I found my wife down in the shopping arcade. That was a risk. But the next thing I forecasted was, Bhaiya, where's your credit card? De do, I need to shop. So I came here for my growth, but I even encountered a risk. Now, if those are the kind of things you need to encounter in business also today. If you are trying to drive growth without risk, nothing will happen. Now the point is, it's not a binary thing. कि या तो I will do only growth or I will only do risk. It's not binary. It's not a switching. I mean, a lot of us, by the way, if you step out of the finance world and speak to a few people, a lot of people call us binary. That's another term used amongst many other terms that are used for us. But the art of today, in today's day and age, the art that we need to hone is not binary, but to play in the gray. Anything between 0 and 1. You need to learn the art of playing that. If 0 is growth and 1 is risk. We need to play in the gray. Now, imagine, for that, to play in the gray, the one thing that you need to do is you need to know both 0 and 1, mind you. Now, you know risk. We are like, the day we step into this world of finance and you go through the rigor of, यार गलती खोजो. सबसे पहले you are trained to find the fault. Look at it negatively, try to tell me where is the fault and fix it. That's how we are conditioned in our mind. So the risk, the one, we are very conversant with. The growth, we are not so conversant. Even today, let's be hard, let's look at ourselves in a mirror. How many of us in this room has gone to a customer and to a difficult customer and sold our products, the products that our company, whether services or hard products, sold the customer through your own skills, not taking another salesperson along. Or even if he's there, he's just a mute spectator. That is when you will understand the business brilliantly, if you can do that. Then you know 0, you know 1, and then you can play. Because you know if I go that, what I'll lose, and if I go that side or this side, what I'll lose that side. So it's absolutely important that we know we are a true business partner, because as I said, risk we know very well, hopefully. So if you know your business, then we can play in the gray, and believe me, without taking risk, growth won't happen. So you have to look, no ship sailed by anchoring because there's risk in the sea. Okay, if the ship is sailing, there's risk in the sea, just keep the ship anchored. Nothing will going to happen. You'll never grow, because unless you go out, find new shores, you're not learning anything. Similarly in business, if you don't take risk, you won't be able to grow. But if you don't know growth and you only know risk and vice versa, nothing's going to happen again. So if you actually see, so how do you do it? If you know your business, then the only thing you should look, and how I do it. I'm not here to preach. I'm going to share what I do. I go after growth because I know my risk. And how do I manage risk? It boils down to managing the risk. So how do I manage the risk? My decision is based on data. So for instance, one risk is customer risk. Okay, so if a pricing proposal comes to me, if I am responsible for pricing, I'm going to ensure that the price that we are paying, we are not out of pocket. The credit terms are not something which is not in consonance with the customer risk. Okay. Second, I'll plan my scenarios. Now, if you know your business well, let's say I am in logistics, I know one lane of my transportation is not doing well. So I will try to get more business on that lane so that my trucks don't go underutilized, right? Now, I need to do scenario planning that if I don't get the volume, what is my stop loss on that lane? Third, diversification. Now, obviously, we are not talking just investments or your resources. We're also talking of customers. So if you are heavily dependent on one, you may just want to diversify. That's another risk that you're looking at, because if that one customer goes down, what are you doing about it? Cost, I think we all know cost. You need to control your costs. And cost, how I do it? Look at, weed out the bad cost as a cost management exercise, which is ongoing 24/7, but incur good cost. Because unless you incur good cost, you're not going to get growth. And lastly, I think what I would do is to allocate resources, because if you do not allocate resources correctly, be it people, be it your capital. Now, if I have only, let's say, one truck going on that lane, and I have only so much of capacity and I have two competing customers, I'm obviously going to look at the customer who's going to give me more profit. But sometimes I may also want to carry the customer who's giving me less profit, because the risk of losing some other business somewhere else with that customer is higher.
Absolutely. Yeah? Yep. I think very well, placed. Risk, whether you see risk as fear or you see risk as excitement, that's what will determine the growth. Jaspreet, the other important part of this puzzle is technology. When we talk about uncertain, the way technology is changing and the requirements are changing, I think that is also. So what role does technology play, in your view, in finance transformation? How can CFOs harness it to drive strategic decision making?
See, basically, for me, the basic essence of financial transformation is efficiency, is value creation. So how do we achieve that? One is process optimization, and second is, of course, technology. There have been numerous examples where technology has been deployed and financial effectiveness or financial transformation has been achieved. Be it countries, be it companies. One of the classic example which we come across is digitization, and especially e-invoicing in Mexico. I came across this case study and it was fascinating to know in 2004, Mexico came and they started towards this process of digitization of their invoices. E-invoicing basically. So what this journey has been over the years, this has helped Mexico to achieve a higher VAT collection. Classic examples, all the LATAM states, all the LATAM countries have been pioneers in this. Now a similar sort of thing, digitization or digitalization has been done in companies also. Where we come in, we as CFOs, we definitely have that technology prowess, we definitely have those tools to ensure we get automation of our financial processes, we get security enhancements, we get risk mitigations. All this can be achieved through technology. One of the examples which I take from my organization, bringing technology to the core of achieving financial transformation, where this played an important role. We are a ID services company doing contact center businesses. So one of our important process, revenue forecasting and capacity planning was being done manually, and this was as back as a couple of years. We embarked on this journey, we got into this process of putting this entire thing through technology, and we made a revenue module which we had done entirely in-house. Now what this has helped us, now we are doing a better planning, better forecasting, and this is also helping me in doing a strategic decision making when it comes to onboarding new clients. I get a real-time access to the data. I get better sort of data planning when it comes to accuracy, and all the stakeholders are being involved because they have access to this financial sort of robustness which comes from the digitization or this revenue module which we have put in. So it's in a way ensuring that you get the right stakeholders when you are putting the technology through and have a clarity in the outcome what you want to achieve.
Absolutely, I think very correct. The kind of efficiency that we can achieve through technology, the kind of insights that we can look through using technology is absolutely something which of course cannot be done manually, but this is something that we have to do day in and day out, and that's the way forward. Vikas, we always say in the context of Newton's first law that we say inertia, how can CFOs overcome organizational resistance to change during financial transformation? I think that's very natural, but how do we come across.
So very important, in fact, Jogendra, before I start, I'm the odd one out on the floor who's not a CFO, but who has over the past 2 decades have dealt with a lot of CFOs and a lot of management, seeing them going through a lot of life cycles, observing them from outside, yet having an inside view also. I can tell you this Newton's first law plays a very important role. You know what it is, I'm sure we've all studied that an object remains in the state of rest, it remains there, and if an object is moving in a state of motion, it keeps on moving unless and until the opposite, reaction, opposite force stops it. So that's precisely how many of the CFO functions plays out these days. Just to take a note from Hemantji's 0 and 1 theory on, and just to replicate it here, a lot of these situations, especially the dynamic times we are in, we have seen health disasters, we have seen economic wars, we have seen so many turbulent times where CFO is always in a flux, whether I should act or I should not act. And if I act, in what quantum of my action and which area of my domain I should act. That's a quandary typically is marred the decisions of a lot of our CFOs, which I have personally dealt with. And I have seen some of them not even choosing to move because they feel if they choose, they can have negative repercussions and they're not able to deal with it, or the management would come back and hit hard onto it. But one thing I can confidently tell you, if you don't act, if it is not your choice, if you don't act without choice, then the outcomes will be far more worse than you can ever imagine. To cite the thesis which I'm putting across, and to cite the reality which I've observed, I can cite 2 instances from my experiences. I was dealing with this large conglomerate a decade back. The group CFO got excited and he gave me a call, Vikasji, why don't you come to our office? I have a great opportunity to discuss with you. During that time, I was working with a large bank. And he said, MD and the board has given me mandate to raise a 200 crore term loan for a large capex which we want to. And 10 years back, 200 crore term loan used to be a fairly large amount, right? And he said, I have to increase my capacity by 50% and I have to raise term loan of 200 crores and we need your help. And I said, more than happy to help you out, sir. But then I want to know a couple of things. Why you're going for capex? He said, we are operating at 75% capacity and we genuinely need more capacity because we have got huge orders from 2 of the large infrastructure players. This company was into switchgear manufacturing. I said, great, fantastic, congratulations. Now, help me understand, the second question is, who's your customer's customer? Who's your customer's customer? How these 2 guys got their orders in first place, right? What is the demand which is helping them out to give you orders in first place? He said, that question I don't know. And I can tell you, 3 days later, he went to his board and he proposed to curtail down that capex from 200 crore to the term loan which was asked for 50 crore and the capex was around 75 crores. And it only held in because 2 years down the line, his capacity was still at 75% because he figured out this customer demand was one time. So the order might have come in that time, but it would not have sustained, the demand would not have sustained. Now imagine the problem the CFO would have faced if he had not acted in that line, and the capacity would have been more than 50% and he would have later on seen the capacity not happening. He would have to take cost rationalization steps, he had to let go of a lot of people, he have to take all those efficiency steps would have been much more challenging than he chose to act that point in time and decided to put his proposal in front of the management. Another example I can cite quickly, a lot of the CFO faces a classic case of a treasury function where they have surplus, they want to deploy it, right? Few years back it was only fixed deposit. Why? Safety net, on tap liquidity. But now imagine the kind of opportunity CFOs has if they choose to understand, learn different instruments where they can not just have higher return yields, but also provide them safety and on-tap liquidity. Maybe it's a few bips higher, but if you looked at a long-term sustainability perspective, growth perspective, these decisions are far more better than you choose to continue to follow the legacy way of investing your money in fixed deposits, right? So there can be many numerous examples, but bottom line remains same. As a CFO, if we can choose to function, yet understand the rest which Hemantji beautifully outlined, and act, I think then only you can take the growth of progress forward.
Yeah, absolutely. I think this is. So Ayush, there is another topic, which is very important is coordination. So what strategies can CFO employ to ensure seamless coordination across departments and stakeholders during, such transformations?
Yeah. So, see, seamless transition is again, I would go back to the anecdote that you used in the beginning, that the CFO or the finance controller is basically the conductor. I mean, he's ensuring that the show must run the way and every moving part should move at, at their proper justified intervals. I think to do this as a strategy, and there is a quote that Harvard uses, which is culture eats strategy for breakfast. So people, again, something that you refer, people, and people. That people management, if you understand that well, then you will be able to envision this journey, that what we are ultimately looking forward to achieve from the finance transformation. And I mean, I have personally done it multiple times. I would say we kind of hold about a couple of days of workshops, and every relevant stakeholder is kind of brought to the table, and we just openly discuss that ultimate my vision is to achieve this outcome out of this whole exercise, and there is no point in competing for one-upmanship in this. It's a team goal, and the more you identify with each other's priority, the better you would be able to work towards the company's goal first. And dynamically, I have seen that it's an infectious energy, it's a positive energy, that the moment you bring people out of their silos and collectively together to work upon a task like this with clearly defined timelines, you are able to bring their best energies out in play. And I mean, I think articulation, advocacy, these are very, very important, because every stakeholder, whether it is your top management, whether it is your outside external stakeholder, or whether it is your internal stakeholder or your customers, they all are concerned if you are going to add efficiencies into your processes. And the more efficient you can make your processes, the better experience the customer is ultimately going to get. So,
yeah, I think that's true. Communication would be very key to this, and using those tools for standardization would also be key. Rakhi, the other thing which is very important in today's world is the regulatory changes that are coming. I was just looking at the one of the presentations, and where somebody was talking about, I think one of the partner was Avalara, I suppose. And they said there are about 260,000 regulatory updates in 2022 in US. So I was just thinking how many of these kind of updates do we get in India? I don't know anybody has done any kind of study or not, but this regulatory landscape is absolutely something which sometimes can be very scary, but very important. And CFOs, with whatever role they assume, this would be their bread and butter role for sure. So Rakhi, what are the key considerations for CFOs when embracing digital solutions for real-time transparent financial reporting? Because we can't do it manually now, so it has to be digital, but also that demand for real-time and transparent changes. Yes.
So I think if we talk about digital transformation in finance, I think there are various considerations which have to be taken into account. But if I talk about some of the key considerations, one of them, I think the first, the most important for me would be that the transformation aspirations are in line with the strategic priorities of the management, of the organization as a whole. It cannot happen that organization has certain other priorities, it's going in one way, and finance transformation is going some other way. So, for example, I come from fintech industry. So let's say if an organization aspire to add in next 2 to 3 years time, they have an aspiration to add another 40 or 50 products in their service line, then the finance should be ready, be it from the regulatory perspective, be it from finance, accounting, or scalability of the finance processes perspective. That will always take priority over other digital transformation projects that finance plans. So I think that's, what the organization prioritizes is something which the finance team should always take into consideration. Secondly, what is important is that, so there are a lot of different new technologies which are always coming up, right? So buzzword could be RPA, could be chat GPT, but what's important is to understand what's the right solution and what's the right requirement for you, for the organization, for your process at that point of time. So I have been part of different kind of transformations, and I've seen that at times you don't need very complex, very complicated solutions. At times it could be, simple solution. For example, there was one integration that we were doing, which was for our payroll processing, between our HR workday system to our payroll processing system. And we were given a lot of different kind of solutions, some very complex solution. But what we could achieve with a simple SFTP solution, that solved our problem very well. It was not a very complex solution, not very expensive, but for our requirement, it worked very well, and it's still working very well. So I think looking at the right solution instead of looking at very complex and very, the one which is trending solution, that would be another consideration. Third thing, and I think Aayush also covered a bit of that, is that when you go for any kind of solution, looking at the end-to-end impact at the whole organization, because we work with a lot of different technologies, very complex technology structure in any organization. We are not anymore working with a standalone application, right? So any application can have upstream, downstream impact. So to have the right solution, it is very important to understand these impacts that any upstream system might require, any downstream system might require. Doing any transformation in silos would definitely at the end not give the right result. For the application which is used probably in finance, for it to get the right data from the upstream application, you have to understand what kind of transformation is required there, what kind of changes is required there, and then what kind of impact it has on the downstream systems also. So having that discussion, having those workshops with different teams within the organization where there can be any impact is very, very important. And then lastly, I would say one of the most important thing, the people and culture thing which comes up is very important. How do you, because Newton's first law, we talked about it, and we have seen this, that people just don't want to change. They're happy using the same technology, doing the same activities day in, day out. And it really requires a lot of effort. It requires planning from a very early stage. And even after the transformation, it requires hand-holding until the change is completely in place. I have heard from a lot of CFOs also, when they talk about transformation in their organization, in finance department, that even after the transformation, it has happened that a lot of people tend to go back to their old way of working. So it requires a lot of effort, a lot of planning. And this has to be definitely taken into consideration for any kind of transformation.
Right. Yeah. Thank you, Rakhi. I think, the people question you said is also very, very important. And I come to you, Hemant, with another people question. But since we have limited time now, I'd request everybody, I'll just ask one more question each. Limit your answers to 2 minutes. Hemant, how can CFOs foster a culture of continuous learning and upskilling within the finance teams? Because this is so true, so so much required with the kind of change and the rapid pace at which change is coming?
Thank you, Jagiji. I think ultimately the only truth which unfortunately cannot yet be valued on the balance sheet is the talent. Okay. Talent on one side and your assets on the other. In my opinion, your talent should outweigh your assets. Okay. So unless you invest in talent, your businesses, you may have the best processes, best technology, everything, best products, best customers, but who's going to service them? Is the talent. So I think you need to nurture your talent, and you know, talent is something like your own children. You must first, in your own homes, when our children are there, they learn, visual learning is the first thing they do. Okay, so you have to show them, you have to lead by example. So when you yourself are, going out, for instance, I have come here, trying to learn from this galaxy of people here, they're seeing that. Let us be under no impression that they don't see all this. Everyone is seeing this. So you must lead by example. Second, give them forums to express themselves. So I create a WhatsApp group, I create fixed time slots on my calendar where everyone presents to everyone, whatever they have done well. That's how you help them to express themselves, and that's a huge need, believe me. Third, I think mentorship and coaching. Create a culture where you have mentors, or you at least give a person an opportunity to have a mentor and a coach, and lead by example. So for instance, I go ahead and for the last decade or so, I mentor at least 2 young girls outside my organization to help them to grow. Okay, so you have to give that opportunity to those guys to grow. Reward and recognition, everyone needs that latent need to be recognized. Okay, give them that. It doesn't cost you too much, but give them that. And last, if you have, help them to understand what is innovation and how they can embrace it, because a lot of time talent gets cowed down by so much of change that is happening. Help them to cross that river, that jwala jo ja raha hai na nadi mein, help them to cross it. Believe me, they'll always thank you for it.
Yeah,
thank you.
Very well said. Jaspreet, another wave in that voyage, is the ethical considerations, so ethical implications. So what are these ethical implications of finance transformation, and how can CFOs navigate them effectively?
Sir, in my opinion, ethical factors are primary when it comes to financial transformation. We cannot achieve financial transformation in a transparent, efficient manner unless there is ethical considerations taken care of. As you rightly said, people, it is people who we need to depend on. People aspect has to be taken care of when it comes to data inclusion, data privacy, transparency, security, all these aspects. And they all come under ethics. One of the classic examples while defining any of the financial transformation is deployment and redeployment of people. We need to ensure there will be a resistance, there will be an inertia from the people who are being moved from one function to another. Their powers are being curtailed or their powers are being separated out of their existing processes. So what we need to ensure is their aspirations are taken care of in an ethical manner. Their deployment and redeployment gets taken care of in a manner where there is a maker-checker concept. Whatever is being done, there is a transparency around it. One of the examples which I can quote from the previous organization, there was a need for a client contracts database. The incumbent team which was working on it, the contracts team, they had all the legacy systems and they were working on it with no access to anyone else in the organization. So there were lapses in terms of renewals, it was not happening on time, there were lapses in terms of the rate revisions. So what we figured out that it has to be roles and responsibilities which have to be segregated in a manner that there is a transparency which gets built around it. So people were given access to different facets of that database, with someone having a maker responsibility who was the account manager, and the incumbent team having a responsibility of a checker and the ownership of that database. Along with that, compliance was also introduced. The compliance team ensured there is a proper renewal which gets done on time. So that's what I would say on the ethics side.
That's very well said. Because there's always that issue of short-term growth versus long-term goals and short-term goals. How do we look at this? How do we look at
That's a very pertinent question for any professional. And when CFO runs the most critical function of a company, this is even more critical for them to handle. I feel in the process of running around and managing your today, do not forget a tomorrow, and definitely do not forget day after tomorrow. So very important that you strike a perfect balance between today and tomorrow. Figure out what are your short-term targets are. You process it in a way that you understand, you define the goals, which is understood by all your stakeholders, all your team members, be it your cost-cutting initiatives, be it your deployment of resources at certain, be it your tech transitioning. Very important that you keep those goals intact, in check, and follow it. And then your long-term goals. Long-term goals could be employment in setting up processes for future, setting up technology, setting up investments in R&D. Many of times I feel when we talk about technology, the technology is not just restricted to finance technology. A technology as simple as a sales tech or a CRM is also a function of finance. Even if it is not directly impacting, but the cost of investment, the efficiencies is bringing it in, and the transitioning cost is also a function of finance. So just a CFO should not idly play in his own domain, but anywhere the cost is involved or the transitioning or the scale is involved, it is his function. Then very important aspect is the ESG. And I think this is a very important topic. I know we can spend hours, but I'll just touch upon quickly. Lot of investors, lot of people are looking at how good are we ESG compliant. Whether our operations are just cost effective, or they also have responsibility toward the society as well. And I can tell you, this is one factor which will play a lot of role for a CFO in times to come, both from the financial transformation perspective as well as running and scaling the operation perspective. So these are the points I feel very critical to strike a balance between both and not just focus on one.
Absolutely, you touched some very important aspects. Aayush, we all look at successful CFOs. What kind of lessons can we learn from them, who have navigated these financial transformations successfully?
There are multiple lessons, I would say. One of them could be that change is actually evident, and you may go from one industry to the other or the other, but some way or the other you will end up repeating something that you have done in the past. But you will be achieving something which is a change to come to a level wherein you anticipate synergies. Now, I'll give one example from my own company, something very recent. We had a RPA tool which was implemented about 2 years ago, and the utilization of that tool was abysmal. When I reached out to my team to ask as to why is an RPA tool which is supposed to solve your problems, we are running short of manpower, why the tool is not being utilized to its fullest, they say there is a lot of input that we need to give to this bot. As a result, we feel that we can do it ourselves. So, as a learning, I would say, or a lesson from my past, I said there is nothing wrong in foregoing something that we have adopted as a solution if it is not working for us. And we let go of that. Then started the journey to explore, okay, there are tried and tested philosophies, there are tried and tested procure to pay tools out there, there are OCR enabled tools, there are duplicates being eliminated, identified. So all that I would say in the last decade or so of moving from various journeys of transformation, some lessons for me have been that be collaborative, listen to your people with an intent to understand them, not to just respond to them, because they are the ones who are holding the key to your transformation success.
Absolutely, absolutely. Last word to you, Rakhi. What role does leadership play in driving successful finance transformations, and how can CFOs inspire their teams?
So I think CFOs now are becoming more and more. They're becoming key drivers of the transformation across the organization. CFOs in the past, traditionally, we had seen that they were limited just to accounts, taxation, but that's not the case anymore. They don't have to limit. In fact, the requirement is that they should not limit themselves to just finance domain. And you also said the same thing just now, that CFOs, anywhere where cost is involved, CFOs get involved. So if we talk about transformation, a lot of benchmarking analysis. For example, if I talk about my organization, when it comes to looking at the benchmarking of the cost against other companies, and then in that effort finding out where is the scope for digitization within the organization, a lot of that now lies with CFOs. So CFOs have become an integral part that way in recommending different kind of improvements that can be brought about, scalability wherever that's required, beyond just finance. So there was a time where CFOs were referred to as CF no's, NO, because they used to keep saying no to everything. You go to them for any kind of budget and they would say no. But I think since then, times have changed quite a lot, and CFOs are more like CF goes than, go for it than knows. So yeah, things have changed quite a lot. It also it also means that the culture, the people and culture that we talked about, the culture of constant improvement that has to be brought about. CFOs are taking quite a huge responsibility there also in the whole of the organization.
Yeah, thanks, Rakhi. I think this was wonderful. I thank my co-panelists for this wonderful discussion. I think we ended exactly on time. Today is a very important day. Today is Shri Rabindranath Tagore's birthday, right? And I truly remember that, where the mind is without fear and the head is held high, into that heaven of freedom, may my country awake, right? So on that note, thank you very much. Do we have time for a question, or maybe one question we can take? Yeah, one question only.
Sure, one question.
Just a ceremonial question. Otherwise, this doesn't get.
Hello. I think thanks to all the panelists, the way you articulated, and you also to the moderator, the way you moderated the entire session. Few things come up really well. Like one of the things that if you know the business and its operations, its product well, you can be a better decision makers. I do agree with the fact that the earlier CFOs, or even today some of the few CFOs, can be termed as a negative, saying no for some things. One question to any of the panelists can answer this part, where CFO versus CEO. The CEO comes with a vision. CFO also are now coming, as you mentioned, strategist and visionary. So far what my understanding was, a CEO can come up with a plan, like in one of the questions where capacity, increasing the capacity, and CFO could get into the details and can suggest what is the right decision making. So maybe a CFO and CEO balance it out. In terms of vision is one thing, and then you moderate where you can reach through intelligent data, through intelligent input from the CFO, because now if you are considering CFO as a partner, they can be the partner in the growth, but at the same time CFO are there to make a balance between where one should aspire to be and what is basis intelligence data input where you should be reaching. So how do you feel that
So,
part?
no, I think, there's no need to answer this question because you answered your question yourself. It was a wonderful statement actually speaking, that the CEO and CFO have to steer the ship together. Absolutely, there is no doubt about it. There has to be a vision of the CEO and there has to be execution capability of the CFO. When we talk about resource allocation or also, where CFO has the capability to say no, right? So that kind of vision, execution, control, all of that role. And as I said, it is a collaborative ship. It's not something that can steer only on your own. But thank you very much. I think this
one
was.
more point.
No, I think I've been
Sorry,
given
if-
this.
if allowed. Like,
we can take it offline.
okay.
We are here only, so we can take it offline. Thank you very much. I think we should respect the time as well. I don't want to do that. Thank you very much. Thanks a lot. And thank
So
you.
it's just a request, if we have any further Q&A, please take it in the networking break. So thanks a lot to all the panel members for sharing your thoughts and requesting everyone to please be on the dais. To do the honors, I request Ms. Mahima Arya, Associate Director at Walters Kluwer, to please join us on the dais. Starting with the felicitation, I request you to please felicitate our moderator, Mr. Jogendra Singh, President of Finance at Hero Corporate Services Private Limited. Mr. Hemant Kumar Ruia, CFO at DP World. Mr. Jaspreet Singh Arora, CFO at Cogent E-Services. Mr. Vikas Arora, EVP and Business Head of Supply Chain Finance at Shriram Finance Limited. Mr. Aayush Saraswat, Financial Controller at ABP Networks. And Ms. Rakhi Aswal, CFO India at Saxo Group India.